improve from all points of view. You know, I mean, in the sense that the reaction to this and response to this by investors, for example, will be very positive. Then the second very important thing is that it would probably have a positive effect on interest rates when you are borrowing abroad for corporates or for other people who are investing abroad. It would mean that the cost of borrowing or investments would go down a bit, and that's very nice, very pleasant, you know. So I am very happy about this particular rating, what you might call.
So one of the immediate things will be the borrowing cost for India will come down globally because our credit worthiness of the borrowing entity does go up. What sort of implications does that really have, the fact that our borrowing costs will go down globally?
No, I mean, it has a very positive impact on psychology, as it were. I mean, it's not that 25 basis points matters, but everybody is looking at it as to how we are shaping up in terms of the global outlook on the economy. And from that point of view, it's a very positive step. And what you would find is that it would encourage investors. It's a positive move for the investors from home, at home as well as abroad. The credit demand would go up, which would help the banks in India. And recapitalization also has been a very positive move. So, I mean, taken together, we are in very good shape. And if you look at, you know, the reason is simply this, that our fundamentals have been very strong. And the economy hasn't, this particular year was not that positive for our economy, economic growth, in terms of economic growth. Inflation, of course, was under control, but investments, credit demand, etc., they were not as high as it should be. And so all these responses that we are receiving from the global economy, the rating agencies, etc., are most welcome.
Right. Dr. Jalan, because the risk premium for India gets lowered, what kind of an impact do you believe this will have on fund flows? I mean, I don't think we can lose too much sleep on the kind of fund flows that India does see, but there is a certain amount of fund that doesn't come to India because of our ratings so far. Do you believe we are now set for higher fund flows, and what does that lower risk premium really do to fund flows really?
Yeah, absolutely. I mean, again, as I mentioned, that the fund flows are based on what they expect from the economy or what they anticipate from the economy. And the fact that our economy has been rated more highly, our country has been rated more highly, and then it helps them to invest in India, because India is a destination for investment, which is very positive. I mean, unlike any other developing country except perhaps China, we are the most, what you might say, in terms of investment, in terms of capital, in terms of future. I mean, we are in the very, very good position. So I am very glad about the whole development, and you would see that the FII is increasing, you would see FDI is increasing, you would see the credit demand increasing, and all the responses will be very positive from the investor's point of view.
So when you say you will see the credit demand increasing, do you believe this will also have a significant effect on the interest rate or the monetary policy trajectory in India?
Of course, definitely. You know, the outlook will definitely improve. I mean, it's not, in the sense that you must, combine this rating with a number of other positives that we already have. We have low inflation, we have, so in terms of capital investment, we have the resources. In terms of technology, we are among the best in the world. I mean, so what I am saying is that if you put it all together, this is a very positive sign. But give yourself some time to see the impact of all this in terms of actual investments, actual infrastructure, because it takes a little time. So I would say that if you sort of look at what it has achieved 6 months from now, you would see that the outcomes have been very positive.
So are you here suggesting that 6 months from now is a good window to assess what the impact of the ratings has been as far as investments is concerned in India?
Naturally. I mean, in the sense that, what I am saying, 6 months, 3 months, 5 months, 6 months, but everybody who is planning, or who is, every institution which is thinking where we should invest, they take some time.